Yo, yo, yo. So I'm just gonna start. There's a lot to talk about. I'm gonna put this under a section in my YouTube channel for beginners because even though what happened with gold today was nice and advanced, this still can be broken down for beginners because gold was fucking clean for gold was fucking clean for August, going throughout all of these cells for August from 1972, even before 1972, from 1972, which was right here, 1972.076, all the way to the low point of 1887. It gave us a break of structure to the upside, showing clear signs of this lower low, lower high point being broken in this area, coming back for retracement, breaking higher again, coming back for a pullback into the buys. It's fucking textbook, fucking clean. We're catching sells throughout August, and then we called out this buy, and we weren't able to get in it because we put our entry at half the candle. But if we would have put our entry at the top, we would have been in this little manipulation when it manipulated back into the area to the upside. So what I'm going to be talking about is our 5 confirmations or 6 confirmations. And this is going to be a beginner slash intermediate training. Now, first confirmation is structure. And I might change this order. Just give me a second. Liquidity. Balanced price action. Institutional candle. And structure, liquidity, and balanced price action, institutional candle, and time of day. Yep, that's good. So 1, 2, 3, that's 5 confirmations. It's 6 confirmations, but you only need 5 confirmations to find a good trade. All right. So we got 6 confirmations. We have our structure, break of structure, liquidity, balanced price action, institutional candle, and time of day. All right. So breaking down gold on the 1 hour time frame, you can see every time I start my videos, I'm always looking at the 1 hour and a 4 hour because they are working together with the daily time frame and the weekly time frame. So we using this thing called top-down analysis, which I will be explaining in a different video. And we are aligning our sights. We are aligning our sights just like you align your sights on a gun. You're aligning your sights on the chart. So right here, we're gonna go through our first confirmation, which is structure. So right here in this 1 hour structure, you can go on a 4 hour or a 1 hour on any chart, and you can mark out lower lows and lower highs and higher lows. Let me pull out an arrow. Lower high, lower low, lower high, lower low, lower high, low, lower high, lower low, lower high, lower low. All right, so you have structure, right? You have structure. For this specific gold setup, we're gonna mark out a downtrend structure, and then we're gonna mark out the moment that the break of structure happens, and then we're gonna mark out the moment the uptrend structure starts happening. So those are our first two confirmations that we're breaking down for gold. So we got the lower lows and lower high points that are marked out here. Now you got consolidation where the price moves sideways right here, and it's building up opinions to see what the market's going to do next. Once you have this consolidation phase, you have no obvious signs that the price starts breaking to the opposite direction instead of continuing the downtrend. All right. If you need to repeat that, rewind the video and repeat that. So let me press back. So we have this consolidation phase in this area right here. The moment the market starts showing signs of higher pricing like this, big giant double impulse candles on a 1 hour time frame, that is a 15-minute break of structure because you're on the 1 hour. And this lower high point is the most recent one. Also, this one is the most recent one. And you see it breaking that. So if we go on the 15-minute time frame, you can see that that's what's going on. Give me a second. I'm about to show you. So right here on a 15-minute time frame, we have lower low, lower high, lower low. Right here starts pricing higher, doesn't break yet. Right here consolidates in the middle, and then it breaks. Why does it break? Because you have candle closes past this lower high point. This lower high point that's right here. This whole area is a lower high point on the 1 hour. All right. So these are where the candles end on this lower high point. These little points at the top of these blocks, the top of these candles, and you see candle closes past that. When you see that, you are good to put a pending order on an institutional candle because we're right here, we identified a break of structure. All right. So when we identify a break of structure, which is right here, that's confirmation 2. I'm going through these confirmations quickly, so if you need to rewind the video, do so. It's confirmation 2. When you get the break past this line, past these blocks, after it breaks a lower high point, and it has to be only after it breaks a lower high point. You get these candle closes past it. Once you have those candle closes past, you can mark out where your liquidity is. Where's your liquidity? Liquidity is a fancy name for resting money. And resting money can either be consolidation or areas where the price is stalling right above or right below an institutional candle. And in this sense, since we're talking about buys, we are going to be looking at liquidity slightly above the institutional candle. All right. So for new people, that might be a little confusing. It's going to take some repetition. It's going to take some repetition for you to catch that. But right here in this area is our liquidity. Why is this area our liquidity? Because this is the lower high point on a 15-minute structure. This is our lower high point on a 15-minute structure because we got that based off the 1 hour. Because if you go back to the 1 hour, that's the lower high point on the 1 hour. Remember, we're using our time frames together. So this is our last valid lower high point on the 1 hour, which is our last valid lower high point on a 15-minute. So when we got this lower high point, and then it created a new low, and price starts trading sideways and is not showing us much, that's liquidity, that's consolidation, that's resting money, that is the market building up opinions, either making people think that it's going to continue lower or it's going to continue higher. So it's just liquidity. When there's liquidity, the market likes to manipulate and take out the sellers and take out the buyers. So if there's anybody buying in here or in here or in here, it's short-lived. If anybody's selling in here and here and here, it's short-lived because the liquidity bounces, the price bounces to break the structure, which wipes out the sellers who has stop losses above here. And then it quickly tanks past these lows, wiping out anybody who bought in this area too early. And it comes into an institutional candle. And that's why this is our confirmations, and it's all going to tie together when I show you the list again. So this is our institutional candle right here, the last down candle before the significant move up after the break of structure. All right. Institutional candle. Your institutional candle, here's your imbalanced price action. When you have a big impulsive explosion of price to the upside, your imbalanced price action. When there's imbalance, the market rebalances. When there's imbalance, the market rebalances. All right. So we have our structure. Remember our first confirmation, which was a downtrend structure. We identified the downtrend structure on the 1 hour time frame, which is all of this noise over here, all of this noise that we marked out on the 1 hour. We identified our breakup structure when we got our candle close. When we got our candle close, our candle close past these candles, past this high and that one. So that's our breakup structure. All right. We got our institutional candle. I'm sorry. What is it? How's the order of the list? Let me see the order of the list real quick. Give me a second. So break of structure, we stop there, break of structure. We go back to our list. Break of structure. Now liquidity. We're going to go back, identify the liquidity. All right. The break of structure is this arrow right here. Once we got the candle closes past these highs, don't lose me. Now the liquidity is what the market left behind. The resting money, the resting area that people are buying from. Liquidity, right? Market comes back after the break of structure into the institutional candle, wiping out the liquidity. So you visually see the consolidation phase, the mini consolidation phase, wiping out the liquidity. Let's go back to our list. Wiping out the liquidity. We identify imbalanced price action into our setup. All right, where is our imbalanced price action in this setup? Our imbalanced price action is this imbalance right here and this imbalance right here. Imbalanced price action is when there is big explosive price and there's no other candle traded in between it. So you see how it's all white and there's no black traded in between? That's imbalanced price action. All white and there's no black traded in between? That's imbalanced price action. So we're seeing our imbalanced price action getting corrected into our institutional candle. That's the next confirmation. Into our institutional candle. And then time of day. There's another confirmation with the fib where we pull out the fib tool and it hits the 886 of our zone. But I'm going to break that down in a different video. The time of day, this happened around 10:45 in the morning, 9 in the morning. So this happened at New York Open. So time of day is important because, we get volatility, and volatility means you just get a lot more action. There's a lot more money in the market. So the markets move a lot more around certain times like New York Open, New York session, London session, and Asian session. I personally like trading only New York Open. I steered away trading London. So this was New York at 10:30 in the morning. New York opens at 9:30. So it was in alignment with this institutional candle, and boom, offered a big impulse move up. Once it offered a big impulse move up, it left all of this imbalance. All right, we're gonna break this down again. It left all of this imbalance. We're gonna do the same exact setup all over again. It left all of this imbalance price action right here and right here. It left liquidity right here that I'm gonna mark in red. I'm gonna mark it in green, so it represents resting money. Let's do dark green. All right, our liquidity. Let's text it. A second. Put money signs on it. We got our liquidity. All right, our resting money when it's consolidating. It's consolidating, turning sideways, leaving equal lows and equal highs. So that's liquidity. All right. Imbalance price action, liquidity. This is a 1 hour institutional candle. All right. Let's go to the 1 hour. Remember, the institutional candle is the last down candle before the big impulse move up. Last down candle, last black candle before a big impulse move up. And as you can see, market corrects the imbalance, wipes out the liquidity right here. Bam, bam, bam. Corrects the imbalance and hits our institutional candle exactly at 9 in the morning, 9:30 in the morning, New York Open. That's why structure, break of structure, liquidity, imbalance price action, institutional candle, and time of day is really important when you're trading, because how coincidentally this happened exactly at 9:30 in the morning, right when the New York Stock Exchange opens exactly at 9:30. This happened at 9:30. This is 9:45. 9:30 is right here. 9:45 is right there. It hits our 1 hour candle perfectly, exactly in our 786 to 886 zone on the fib, and it explodes upside, offering us a beautiful risk to reward of a 1 to 7, and it's still running to the upside. You know what I'm saying? And this happened after a break of structure on a 15-minute time frame and the 1 hour time frame. Because if you look, a break of structure, this was our previous lower high point, created a new low here, and then we got candle close. These candle closes close past this lower high, which makes and confirms a valid break of structure into the 1 hour time frame. And then it comes into our 1 hour institutional candle, our last down candle before another impulse move up, comes back into that discount zone, trends, and then repeats the same thing. Here's the liquidity, here's the imbalance price action, wipes out the liquidity into our institutional candle at 9:30 time of day to trade higher. Now, that's all I have for today. I broke down how to find fire setups. Rewind this video as much as you need to, because this is the way to trade. This is literally the way to trade. This is smart money at its finest, and this is literally how the markets move. So be blessed. Rewind the video, like and subscribe to my channel. Share this video with a friend. Share this channel with a friend, because a lot of people need to learn about this stuff, because this stuff allows you to print money straight from your laptop, computer, iPad, or a cell phone device. But all right, family, I hope y'all have a blessed one. And I hope you guys learned a lot and took a lot of notes. Peace.